Hey everyone, welcome back to the How to Start a Trucking Company web series. I'm your host, Alexandra Figueras, CDL Defense Director here at Simplex Group. For those of you that are new to the series or new to Simplex Group, I want to give a quick background on who we are. So Simplex has been in the industry for 24 years, offering a suite of business solution type services to trucking companies and their drivers. I've been in the industry for 11 years now. My expertise lies in everything that there is to know about insurance, DOT safety compliance, and licensing and permitting for trucking. A quick recap. This series is intended for drivers looking to start their own trucking company. It's not intended for investors. We could do that at a later time, but again, it is for drivers looking to start their own trucking company. So just a quick reminder, this is a web series. We're going to have several sessions over the next several months. So follow us on social media, keep up with the dates and times. Make sure that you're signing up and registering for these sessions. Make sure that you're taking advantage of the option to submit questions and suggestions. So today's session is going to be all about insurance for new trucking companies. I'm going to cover the requirements and the process so you are better prepared and know exactly what to expect throughout. So what exactly do you need for a quote? Well, you're going to need everything that we covered in our last session. So you're going to need your company set up, your DOT number. You're going to have applied for your operating authority. And you're going to need to have your type of operation figured out, right? Your cargo, your radius of operations, your equipment type, and your driver licensing needs as well. In addition to that, in order to get an insurance quote, you're going to need to have a driver. So you're going to have to provide a driver's license. Now, just a quick reminder, drivers with less than 2 years with a CDL, insurance underwriting guidelines tend to exclude you, but there are companies that do offer coverage. They just tend to be far more expensive. So just be aware of that. You're also going to need to provide your equipment to your agent. You don't need to have a trailer, but you do need to have a truck because you do need to be able to provide the year, make, VIN, and the gross vehicle weight. And then lastly is going to be enough funds to cover the down payment of your total annual premiums, which is generally about 20%. Now I'm going to cover some common definitions. These are some terms that you're going to hear a lot throughout the quoting process. So I want to make sure that you guys are well aware of what they mean. Commercial auto liability or liability is an insurance policy. It covers third-party bodily injury or property damage that is caused by your equipment. An example is you're driving to deliver a load, you crash into a vehicle, you damage the vehicle, and you injure the people in the vehicle. Your auto liability is going to cover the cost of the injuries and the damage to that vehicle. The next type of insurance coverage is going to be your motor truck cargo or your cargo. This covers the loss or damage to cargo while it's being transported by your equipment. So same scenario, in that accident, the cargo is damaged. As long as that type of cargo is covered under the cargo policy, it's going to cover the damage that is sustained. The next type of insurance policy is going to be physical damage. This covers insured equipment. So same scenario, you have physical damage coverage on your truck and the truck is damaged during that accident. It's actually going to be covered under what's considered collision coverage under your insurance policy, which is damages sustained from an accident. There are other types of damages that are covered under your physical damage policy. That falls under comprehensive. That's anything from vandalism, theft, fire, even striking an animal. These are the types of coverages that are covered under your physical damage policy. Now, some insurance terms, insurer is your insurance company. This is the company that provides you with the insurance coverage. The insured is you. You are the policyholder. You are the individual or the company that is being insured and covered under the policy. Annual premium or premium is the total amount of the policy for a year. A deductible, you've probably heard this term before in other types of insurance. It's the out-of-pocket amount that the insured has to pay before the insurance company covers a loss. Underwriting is the process that the insurance companies follow when they're determining whether they're going to offer you a quote or extend coverage to you. A quote or an indication, this is the estimated amount that the policy is going to cost you. And this process follows the underwriting process. An agent or retail agency or a retail agent is the business or an individual that is authorized by insurance companies to sell and service their insurance policies. Markets or insurance markets or insurance programs, these are all the different types of insurance companies and all of their different types of insurance programs that are available. You want to work with agents that have access to a lot of different markets because that is better for you. It increases your chances of finding the right types of coverage and sometimes even getting better quotes. Inclusions is it details what's covered under your policy, so make sure you're aware of that. Inclusions details what's not covered under your policy, so you want to make sure that you're fully aware of what's covered and what's not covered under each of your policies. This term, new venture, it's a term that's given to newly established trucking companies. So that would be you. During the first 2 years that they're in business, they do have to have consecutive insurance during those 2 years. But it is a term that is issued to new companies. This is when you're considered the highest risk to insurance companies. Now we're going to go over some different policy types and their policy limits. But a quick note here, federally required for all carriers, insurance is going to be auto liability. But if you're a hazmat hauler or a household goods carrier, then you're going to also need cargo. But if you're going to be hauling other people's loads, you're going to need both auto liability and cargo because they're going to want their cargo to be insured. Now, the different types of policies and the different types of limits, that all depends on your type of operations, which we talk a lot about. For auto liability, if you are a general freight carrier, $750,000 is the minimum. It's what you need to activate your authority. However, industry standard is $1 million. Auto liability for hazmat carriers, as you can see, increases up until 5 million. So it is 1 to 5 million. That all depends on the type of hazardous materials that you're carrying and the quantity. If you're if you're a passenger carrier, the amount of your policy is going to be 1.5 to 5 million, and that depends on the number of seats. So if you have 15 or less seats, it's going to be 1.5. If you have 16 or more, it's going to be 5 million. Now, cargo for general freight is going to be 100,000. That's pretty standard. Cargo for autos can be upwards of 250,000 or more, depending on the quantity of autos and the value of those autos. Cargo for specialized freight, as you can see, it can go upwards of $5 million or more. It really depends on what you're hauling. That can be artwork, pharmaceuticals, electronics, hazardous materials, gold. These are things that can increase those cargo policy limits pretty quickly. Physical damage is a type of coverage that you should also consider getting. If you own your equipment outright, so there's no lien holder on it, there's no finance agreement or a lease agreement, the general rule for insuring your equipment is going to insure it for the actual cash value, which is the amount to replace the loss of your equipment minus depreciation. This is the amount that the insurance company is going to pay, regardless of the value that you state in the insurance policy. So if you overstate the value, the insurance company is only going to pay actual cash value, meaning that you're going to be paying more in premium than necessary. If you understate the value, the insurance company is going to be capped at that amount, meaning that if it costs more to replace your equipment, you're going to be stuck paying that remaining balance. But you can use different types of resources online. You can go to resale markets. You can go to JD Power to find the correct value for your equipment. Now, as I mentioned, if you do have a lease or you have a finance agreement, they're going to require physical damage coverage for their equipment. So you can find those amounts on your contract. Some additional policies that you should be considering and you should be aware of when you're obtaining quotes. One of them is going to be excess cargo. So this is secondary to your primary cargo policy, which is capped at $250,000. So excess cargo is coverage that exceeds the $250,000. This can be used typically for like high value loads. So for example, an auto hauler that hauls high value autos or luxury autos is likely going to need an excess cargo policy. Trailer interchange, this supplements your physical damage policy by extending coverage to what's considered non-owned trailers. This is pretty typical when you're working with intermodal carriers. Towing and storage, this supplements your physical damage and your cargo policies. It covers the cost of towing and storing your equipment plus the cargo after an accident or from a breakdown. Highly encourage this type of coverage because towing and storage costs can get very expensive. So this is going to help you avoid all of those out of pocket costs. And then general liability, it's not auto liability, but it is coverage for third-party bodily injury and property damage that's caused through business operations. Now, some important notes before we move on to the actual insurance quoting process. You're going to need proof of insurance or proof of auto liability in order to register your equipment. Unfortunately, you can't circumvent the insurance process to try to get ahead of some of the other things that you need to do in order to start your company. You're just going to have to wait for the insurance to be bound and get that proof. I highly recommend you speak to your agent, ask a lot of questions about gap or the deductibles before purchasing cargo and your physical damage policies. You want to understand when you need to pay deductibles, what are your options for deductible amounts, because it could impact your annual premium. Something that you should be aware of if you're an auto hauler, the deductible is typically per auto. Another thing is different states may impose different requirements or different insurance limits. So it's really important for you to be truthful with your agent and telling them what type of operation you're going to engage in, because they're going to be helping guide you and get you the right type of coverage that you need based off of your state and the type of operation that you're going to be engaging in. And then the last thing is, just caution around growing during your first 2 years, right? While you're a new venture, Now is the time to learn how to operate a successful and safe trucking company. If you're worried about adding drivers and what they're doing over the road and how it's affecting your company, plus you're learning how to operate this new company, plus you're trying to drive yourself, you can stretch yourself pretty thin. So just be cautious with growth. If you are going to grow, do that in your second year. And I recommend growing no more than 2 additional trucks. Getting you to 3 trucks under your policy, but you do want to check with your agent to see if you have any limitations under your insurance policies for growth before you decide to do that. So, what is the quoting process for a new trucking company? Well, you're going to have to find an agent or an agency that's going to be able to help you get quotes with a lot of different markets. And you're going to be providing them with all of that information that we said that you needed to have to be prepared. You're going to be providing them with everything for your company, everything for your equipment. And then they're going to take that information, they're going to run an MBR for your driver, and then they're going to determine what markets you're compatible with that they have available. Now, this process between finding the agent and providing them with all the details of your type of operations and them submitting you to the different markets for quoting, that process should be done fairly quickly. It should take no more than a few hours. The part that you are going to have to wait for is the response from those markets as to whether they're going to offer you a quote or not. That varies greatly from market to market. It could be hours, it could be weeks. So just be patient, follow up with your agent if necessary. But once the agent does receive a response from the different markets, if the market does decide to decline, they're going to provide the underwriting reasons as to why they declined you. This is an opportunity for you to maybe consider changing some things, either getting newer equipment, hauling less risky cargo, getting a driver that has better experience. These are all things that you can probably change, and then you can request to resubmit for quoting again. But if you do get a quote from one of those markets, that's great. The agent is going to provide you with the rating of that insurance company, the policy type, the different coverage options, the different limits of your policies, if there's a deductible, what your options are in terms of that deductible, and of course your annual premium. Quick word of caution here. Not all insurance companies are created equal. It's important for you to understand the ratings of those insurance companies because it could affect your access to loads. I would encourage you, if you can, speak to any brokers or shippers that you're planning on working with to see if they have a list of insurance companies that they don't work with, because this is going to save you a lot of headaches later on down the line. So once you've reviewed all of your options, you're going to select the policies that best meet your needs. Now, what's called the binding process can begin. Your agent is going to provide you with applications for every type of policy that you've selected, and they're also going to provide you with a finance agreement. You may ask, why a finance agreement? Well, these insurance policies are pretty expensive. And the insurance companies require for them to be paid in full in order for them to give you coverage. So it's a very common practice. Agencies work with a finance company. So your obligation in terms of the premium is going to be 20% of that premium. And then the remaining balance is going to be split with monthly payments, typically about 10 monthly payments. So you're going to have your insurance bound once you've put down that 20%. You're going to have your insurance, but then you're going to have to be making monthly payments to the finance company to make sure that that insurance stays active. So once you've provided the 20% down payment to the agent, you've completed all the applications and forms, you've signed them, they're going to submit all of that documentation over to the insurance company so they can bind your insurance. And then their agent is going to issue you proof of insurance in that form of the COI that I mentioned previously. So once the insurance company has bound your insurance, they're obligated to file the insurance with the FMCSA to activate your authority. That process takes about 3 days. It could take longer, it could be done much faster, but generally it takes about 3 days. However, there is a grace period that you have to be aware of. So there is a grace period between the date in which you apply for your operating authority and the date in which your operating authority can become active. That's 25 days. So if you bind your insurance 5 days after applying for your operating authority, you are going to have to wait the additional 20 days before you can actually get started. So just be aware of that downtime because, obviously it is 20 days. But once your operating authority is active, then you can continue with the rest of your process, which is you can begin applying for registrations and permits and all of that. So the biggest question that we get is, why is commercial trucking insurance so expensive? Well, we have to put things into perspective here. So this is a high risk industry. And you're also high risk to the insurance company because you're a new venture, you're new to the industry, they don't have history on you, they don't know if you're going to be able to operate a safe operation, right? So you're going to have some of the highest premiums during these first 2 years. You have to also take into consideration that these policy limits are very high. Auto liability is at a minimum 750,000. So you have to put that piece into perspective with the amount that you're paying versus the amount of coverage that you're receiving. And another thing to be aware of is that commercial transportation claims are on the rise. So it does put a lot of pressure on the insurance companies. A few ways in which you can keep your insurance costs down is obviously maintaining a clean driving record, but you want to maintain healthy safety scores. You want to avoid filing claims on your insurance, and you want to avoid growing too quickly. Now, you can do all of this by not cutting corners. Okay, you want to make sure that you are following all the rules, all the regulations, do your pre and post trip inspections, follow hours of service rules. If you're going to be going through a route where there's a bridge, make sure that you understand the height limits. Be thorough when you're receiving and delivering loads. Check the paperwork. Make sure what it says on the paperwork actually matches with what you're receiving. Follow safety measures. Properly secure your cargo. Make sure that weights are evenly distributed so you avoid any incidences over the road. Maintain a good preventative maintenance program for your equipment to ensure that they're in safe operating condition while they're over the road. Make sure that all your drivers and equipment are also covered under your insurance. Make sure that you're sticking to policies that you've put in place and that you're sticking to the insurance policy guidelines, so inclusions and exclusions that's listed out in each one of your policies. That load might seem enticing, the amount might seem great, but if you take a load that is not for cargo that's not covered under your insurance policy and something happens, it's not looking good for you. If you are honestly not sure what's covered and what's not covered, just contact your agent. They should be able to provide those details to you. Now, if you are planning on growing, make sure you're hiring experienced drivers with clean driving record, conduct thorough background checks on all of them, make sure that they're doing a driving test before hiring them. Implement strict policies that promote safe driving and compliance with all the rules and regulations. Make sure that you're proactively monitoring driver behavior over the road, and make sure that you have a good training program in place for your drivers so they have refreshers on all the different rules and regulations, your policies and procedures, and any sort of risk preventive measures that you have in place. Now, this can be a lot for somebody that's just getting started. My recommendation is get help. Find a company that has expertise in providing support and guidance on all of the above. So that's all the time we have for today, guys. We've run out of time to answer questions. We're going to be posting responses to all of your questions over the next several days. You can find us on Spotify, on YouTube, and our blog as well. Make sure that you're keeping up with us on our future dates and times for our next session. Make sure that you're registering. That's all for today. I'll see you in the next one.